Oh, hey, what's up, guys? This is Mr. Fit to Flourish. Today, I wanted to talk a lot about how to enter a trade. Okay, we need to understand how to enter a trade, the best way to enter a trade, and then what you do after the trade. Honestly, it's up to you. You don't need to follow SMCICT, take profit, forex strategies. You don't need to follow any of that. If you're making money and if it's making a significant change to your account, you decide when you want to exit the trade. Okay, you can always have targets, which is good. It's good to have a target, especially in life and in stocks too, because they act as a goal, and you can't hit a target that you can't see. So if you have a target, that's good. But when you're trading options, like I trade options, when you're trading options, and you have a target, a lot of the time, even before you hit your target, you'll see that you're starting to make a ton of money. So a lot of the time, I'll have a target, but I'm already up 70, 80%. And I'm like, yo, this is making a significant change to my account. And I'm also hitting my goal for the day. My goal is $500, and I'm usually ending up doing $1,200 to $2,000 in a day. And I'm like, well, I'm not going to take the risk of this going down. I'll take the money out. Okay. Even if it didn't yet hit my target, that's fine. And you can always leave a couple to run, take it out, whatever you want to do. Okay. Whatever you want to do. Do you want to become the best trader of all time, or do you want to just make money? What is your goal? Don't pay attention to anybody else. But let's take a look at some of my rules for guaranteed wins, and then we're going to apply that to how I use it to enter trades. Okay. So here are my rules to entering trades. Guaranteed wins. Seriously guaranteed wins. And this is not just like, oh, I made this up. This is what I've studied over the years. And this is also studied from some of the greatest traders. So like Mark Minervini, Mark Douglas's psychology books, just a ton of traders I mentioned in a lot of videos. But anyways, number one, as a retail trader, do not trade before 10 a.m. Eastern Standard Time. I'm going to keep saying this in all my videos. And it's because when I started trading, I was like, you know what, I can do this. I can trade right when the market opens, 9:30 to 10 a.m., which is pretty volatile, right? But you don't really have a lot to go off of. You have price opening in some random area, and then it can go either up or down, and you're kind of gambling. You don't know what big money is going to do, and you get a lot of not only manipulation, but you get a lot of price fluctuation in the first 30 minutes of market open. So, and I've documented, and I noticed a lot of my trades, almost like, or a lot of my losses, probably about 80% of my losses came right before 10 a.m. because I kept trading before 10 a.m. And then 10 a.m. is a reversal time. So Eastern Standard Time, 10 a.m. Eastern Standard Time is a market reversal time. If you look at the charts every day, like clockwork, at 10 a.m., you get a reversal every single day. Okay. Another thing is, do not listen to or follow other traders' opinions, analysts, YouTubers, your mother. Do your own research. So a lot of people are asking me like, oh, what do you think about NVIDIA? It doesn't matter what I think about NVIDIA. It doesn't matter. Stocks go two ways, up or down. Okay. Stocks can only go up or down. If I say it goes up and it goes up, you'll be like, oh, wow, you're a genius. If I say it goes up and it goes down, you're going to be like, oh, I don't believe you. You're trash. Like, it doesn't matter. Okay. I don't have the money to move the market. So I don't know what big money wants to do. Okay. I can give you a good idea of what may happen, but then the markets can always do whatever they want. Okay. And you need to be trading what the market gives you. So if the market starts to go up, then you trade with that momentum. If it starts to go down, then you trade with that momentum. You just need a setup that allows you to take the trade, to take the entry, which we're going to talk about in a little bit. And then again, make sure you stick to like two setups. Okay. I have just pretty much one setup, 920 crossover with the good trend bar. All right. So let's just get right into it. Oh, actually, treat every trade like a marriage. If it doesn't fit your criteria, make sure you have 3 to 4 pieces of confluence. So 3 to 4 pieces of evidence, and then just take profit as the market makes it available. All right. So yeah, let's get into it. So let's share this tab. So we're gonna look at QQQ. I usually trade SPY, but I saw some opportunity with QQQ here the other day. So with QQQ, it looked like we put in this double bottom here, pretty near double bottom. So let me kind of circle that, make this pretty big so we can see it. This is on the 2-hour time frame, by the way. I like to do a lot of analyses on the 2-hour time frame because the wicks that you see are usually large institutional orders. So here's one bottom, and then here's like our pretty much our second bottom. And then whenever you have a double bottom, you have a neckline. So you have a move down, a push up. That push up gives us a neckline. So this would be our neckline right here. And then our second move down. So that's our double bottom. So today what I was looking for was if we got a clean break below this 473.20 level after 10 a.m., then I would take shorts. Okay, if we got a good hold and break below 423.20, I would take shorts. But what happened is we wicked up and we ended up pushing to the upside. So my thesis for the day, again, the way you plan entries, I made a video on this the other day, is you look at the two ways that stocks can go, which is only up or down, and what can possibly happen. So I said, what possibly is going to happen? Well, we'll probably hold this level, this double bottom as support, and then make a move to the upside. Or we'll break it so hard that we'll end up moving to the downside. And then I had my target levels to the downside at 468 and then 463. But then to the upside, I had my target levels of 476 and 478. And that's only if we hold. So you need to see the two ways or two things that can happen. So I said, okay, we can hold this and move up, or we can break, hold, and move down. So now I go to the 5-minute time frame, and what happens? Well, the market opens, we gap down. This is the 5-minute time frame. We gap down, we get below that level, but it's still before 10 a.m. So here it's 9:45. This bar is 9:50, 9:55, 10 a.m. So 10 a.m. looks like we were going down, and then right at 10 a.m. like we get the reversal, we go to the upside, okay? And then what else is happening? So if we take a look at the chart, the pink line, which is our 9 MA, is crossing above the 20. I like to use the 9 and 20 MA. I really don't tell anybody this except people in my Discord, but I use the 9 and 20 MA as really good confluence for drastic, massive moves. So the fact that we have our smaller MAs crossing here shows huge moves are about to happen. So we had an upward curl on the 9 MA showing a lot of bullish activity. Another thing that I do to enter trades is I look market wide and see what is Nvidia doing. Nvidia is like our thermometer. What is SPY doing? What is Microsoft doing? And what is Apple doing? You need to understand what are these other stocks doing, because that's where a lot of big money is. If they're moving to the upside, then likely QQQ and some of your other bigger stocks are moving to the upside. They're all being bought by the same investors. Anyways, so we get the 9 MA curling above the 20. But still we have these weak bars. I'm like, these bars are too weak. I really wanted to enter. And this is a trade I took on live. So I was like, I really wanted to enter here. And I said this. I said, I want to enter here, but we don't have my setup. My setup is a good 920 crossover, a nice signal bar, and then a move to the upside. These are dojis. Dojis are non-trend bars. Small bars are non-trend bars. Trend bars are big bars that contribute to the direction of the trend. This trend is an uptrend, and then we have big bars that you would enter one tick after those bars. So we finally got our 920 crossover here, the pink crossing above the yellow. And then we had a nice bullish bar. And I said, you know what? I'm going to take this entry. This is a very good entry. Where do I enter? Excuse me. I wait for the bar to close, and then I get in one tick after the bar closes. So after this bar, this is called my signal bar, which closed above the 9 and 20 crossover. It's a trend bar because it's contributing to the direction of the trend. It's a big bar. I enter one tick after. So on the open of this bar, I entered, and I rode that all the way up. And I took 0 DTE, so 0 days to expiration options, because I wanted a large, rapid move in my options gains, and also because we had a lot of momentum here. It looked like we had a lot of momentum, and we did. We pushed up pretty quickly. So in 6 minutes, my contracts went up 50%. Okay, 50%, or $700 in 6 minutes. And if you never traded options, or like you never traded before, you might be like, oh my gosh, that's a lot. That's not really that much. We've had plays where we put in 2,000 and in 30 seconds to a minute, we're up $6,000. Okay, so options move pretty quickly, especially when they have 0 days to expire. That's a topic for another video though. But to enter the trade, one tick above a trend bar. Now, a lot of people ask me, well, if you enter up here after this signal, where do you put your stop loss? Well, stop loss, a regular Wall Street stop loss, is one tick below the low of your entry bar. So if price starts to go the opposite direction, your stop loss just needs to be somewhere that you can identify as, okay, well, this trade is probably going to go the other way. And if it breaks below the low of this bar, you probably have just a reversal. So you need to get out. You're not going to wait until it goes all the way down to like these lows and you're like, oh, it could turn around. And then it just keeps going. And then next thing you know, you're down at 90% on your contracts. Once it hits your stop, which is typically one tick below your entry bar, just get out. And the rule is good trades just go. Good trades just go. So if you enter here and the trade just starts to go, then it's a good trade. But if it starts to retrace a lot, then it's probably not as good of a trade as you thought. But sometimes it could end up ripping even with just a slight retracement. But if it pulls back all the way below the low of the bar, your entry bar, when you're day trading, then it's no bueno. It's no bueno. This is different from a swing trade. On swing trades, if you enter here and then you're looking for a larger risk to reward, that's fine to have a wider stop. But just in terms of day trading and day trading 0 day expiration contracts, you're looking for momentum trades. Okay, you're looking for momentum trades, which is the only time that you enter 0 day to expiration options. Okay. And then I did want to talk about one more trade that we took. There was a trade we took yesterday, some puts. I'm trying to remember what it was. I might have went over it on the other video the other day. I will go over it on another video. I can't remember which one it was, but that's pretty much how to enter a trade. You enter one tick after a trend bar. That could be to the downside. So if it's a bear bar and it's a trend bar, which is a large bar, you enter after that bar closes. So do not enter as the bar is forming, because it can always be a huge bar and then like 30 seconds before the bar closes, it turns into a wick, so, which means that price gets pushed in the opposite direction, creating a tail. Okay, so that's why you want to wait till the bar closes. All right, so just basic ways to enter a trade. And then again, exiting a trade, you set your targets based on previous highs, previous resistance levels. If you like SMC strategies, you can look at order blocks. Just any area of resistance or previous support, that's always really where you want to target. And those are also order blocks. So just look at areas on the chart where it was hard to get above or where price was like sitting on. Okay, that's all you have to do. Just keep it simple. And then, like I said, if you don't reach your target yet, but your options are up like 130%, take profit. Take profit when the market gives you profit. Anyways, hope this helped somebody out there. It's Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.